red flags that landlords need to be aware of when it comes to property investing in South Africa?
Yeah, as a landlord, the main thing that you want to do is that you want to be purchasing a property in the right area that will yield the best results for you. So now, today we're actually going to be going deeper in terms of the right areas. Is there such thing as a right area? And how do you position yourself as the property investor? Now, man, there were some things that I was actually looking at, right? So now they were saying that the rental market is actually good right now, and a lot of people are flocking into the rental space, right? Now they were saying that looking at apartments, I think this is the right kind of information that we need, especially as property investors, because now you end up not understanding or not knowing where the market is right now.
Yeah.
So we're looking at the market right now, and most of the people in South Africa, right, are buying properties that are between 800,000 and 1.5 million. And just to digress a bit, this is also good for people that are flipping properties, right?
Yeah.
Now you understand that if looking at your apartments, people are buying properties between 800,000 and 1.5 million, already you know how to position yourself, right? Now the second thing is that with freestanding, they are also seeing a demand of properties selling in between 1.2 million to 2.5 million. So now this is where I had a problem with, right? You know, when it comes to numbers, bro, we are really big on numbers. Now, looking at what was given to us, they are telling us the rental yield of these amounts is sitting between 12% and 8%, between 8% and 12%. That's for you're looking at your areas such as your Randburg, right? And then looking at your areas such as Centurion, you're looking at a 6% to 7%. What's your take on that, bro? The way they are linked is that they were looking at property investors or property buyers in that market.
Yeah.
And then they also looked at the relationship between the property buying and also the rental income that one might actually get.
Yeah.
So looking at a property at, let's say, 2.5 million,
Okay.
and they're saying that the rental yield in that area or of that property could range between 8% and 12%.
And 12%. Okay.
Yeah.
So ultimately, man, I think for me this is an unfair question because I already understand when I'm looking at the rental yield,
Yeah.
I'm looking at my gross, which is very dangerous.
Yeah.
So what do I mean by saying that? It's focusing on income versus the purchase price of the property, whereas it's not necessarily looking at how much I will be left with on a monthly basis. So yes, this can be in a high demand. However, now at the end of the day, I don't want to be in a market that's high demand, but I'm making a loss.
Yeah. I like that you touched that, right? So for the people that are not as experienced as you are now,
Yeah.
can you please just break it down? What would then be the difference between your gross yield and your return on investment? Just make it as easy as possible, like you used to.
So when I'm looking at my return on investment, I'm looking at a percentage whereby it will tell me how much I invested versus how much I'm getting on an annual basis.
Okay.
So then I get to understand that am I really running at a positive or am I running at a negative? That's why when you hear a lot of people speaking about return on investment, they are big in terms of how hard my money is working for me. So this is after deductions. Whereas when I'm looking at my gross, it's before deductions because it's basically comparing my annual the annual money that I collected versus the purchase price of the property. So yes, the annual money that I collected could be, let's say, 50,000, but my expenses could be 60,000. So again, I'm running at a loss.
Yeah.
What did I really want out of that property?
Yeah. I mean, also look at this one, right? They were suggesting that a property that's worth 1.85 million
Yeah.
should be rented out at 13,500.
What are your thoughts about that one now?
This one is hectic, right? Because now, when you're just looking at most of us, right,
Yeah.
when we're purchasing properties, we're not purchasing properties cash. Especially looking at a property that's worth 1.5 million.
Yeah.
We're not purchasing properties cash. We're probably going to be going the bond route. Now, if I'm going the bond route, if I'm just looking at a property that's worth 1.85 million,
Yeah.
this basically means that on a monthly basis, I'd be paying something around 19 to 20,000.
Yeah.
Now, if my rental is only 13,000, what does that mean for me? It means that I'm going to be running on a consistent loss on a monthly basis. Now, the thing about it is that we might say that invest in Randburg or invest in Centurion or invest in Cape Town because it has a lower vacancy rate. But now the question is, are you as a property investor running cash flow positive? Now, we could look at property investing as a whole in South Africa, right? that the vacancy rates are low and stuff like that.
Yeah.
But now, what's more important is for you and your portfolio. Because remember, when you go into the bank and asking for a loan, they're not going to say that no, South Africa is having a low vacancy rate. Therefore, we're going to be giving you. We want to see the business model. That does your business model actually make sense, right? Now, if you're looking at this particular situation whereby your bond is going to be around 19 to 20,000. And now your rental income that you're collecting on a monthly basis is only sitting on 13,500. Already automatically that tells you that you're in a cash flow negative. Now, a cash flow negative, I mean, a lot of people have actually, we've received backlash from this cash flow negative issue, man.
Yeah.
Do you think that cash flow is a cash flow negative property in your radar, or would you be something that you'd purchase?
I mean, we've had a lot of conversations when it comes to cash flow negative and how that impacts us. Cash flow is king because that gives us affordability. So once you take away cash flow, now the question is, how will I be able to afford the next one? So for me, it's a no-brainer in a sense whereby I'm focused on cash flow positive that will ultimately enable me to scale. Yeah.
Now, so what is your biggest reason why you're buying a cash flow positive property?
As I did mention, bro, the more I'm getting, it allows me to scale. Whereas if I'm not getting much, the ceiling, I'm about to hit my ceiling. So you find out, I always do this example that whenever we at our workshop, you find out that whenever we ask this question that how many people have one property, a lot of people raise their hands. How many people have more than one? Most of them decrease their hands. When we get to 3, 2, 3, 4, not a lot of them have their hands up. It's because we're not paying attention to the numbers. So numbers make sense to me, and hence I'm only going to something that makes cash flow positive.
Actually, no, this other day, man, you said something that really touched my heart until today.
Yeah.
You said that with property investing, people are more invested in the business. So me going to check my tenant, me going to check out what's wrong with the property, and now we're not really looking at the business side of it. Right? For me, cash flow positive is actually looking at the business side of it. That if I'm going to be renting out this property, does it make business sense? Now, yes, I understand that property investing is the go-to thing. Yes, I understand that let's invest in property because it's going to appreciate in value. However, the question, or my question that I have is that, is it sustainable for me to be holding this property? Because remember, I don't want to be increasing my monthly expenses, especially whereby I'm going to have to take out money on a monthly basis. So things such as your credit card, so things such as your home loans, things that you are actually going to have to pay on a monthly basis for the rest of your life, be it that you like it or not, as long as you have that particular loan. I do not want to actually be accumulating all of those if I don't have a plan on how it's actually going to be putting in money on a monthly basis. So if you're looking at a property that's running cash flow negative, right, meaning that I need to take out money from my pocket every month, this basically means that if I lose my job that's sustaining this property, this basically means that if I lose that job, I need to sell that property as soon as possible because I ultimately cannot afford holding this property.
Sure. Let's move on to red flag number 2, right?
Yeah.
When it comes to number 2 is that, especially this one is for the cash buyers. Like, you know, the cash buyers, we have a lot of problems with them, man. Because every time when you're looking at a cash buyer, it's more about efficiency and I want control over the whole thing. Whereas I really need to understand the process and the risk that is involved when it comes to buying cash. So one of the red flags, the major red flags, as you as the landlord or you as the buyer when it comes to property investing, is that we need to make sure that there's always a third party.
Okay.
Who's the third party?
No, I'm listening to you.
Don't look at my notes, bro.
Let me see.
So when we're speaking about a third party, when it comes to cash buyers, because I've had so many encounters with them whereby it'll be like, you know what, but I saw this property, I want to buy it as soon as possible, and at least through me buying it cash, I will not be paying any bond attorneys. So it needs to be fast. Now, you forget that as soon as you are saying that you're dealing, for instance, let's say I'm the cash buyer and I'm buying it from Lebo, and I do not want to involve the estate agent because I say that I want to save, because estate agent will charge you a certain percentage. And then I come back again and I say that I do not even want to get attorneys involved. Now what that will do, so an attorney is the third party in this conversation. So what would then happen is that I want to buy a property, and I just want to give you the money, and then you give me the agreement, you give me the papers, and then we're gone. Property doesn't work that way, man.
Yeah, doesn't work that way. Because you are actually using a lot of money.
Yeah.
You're transferring a lot of money from one person to another. Therefore, we need to make sure. I mean, just with a car, bro. With a car, you stress so much until the money is in your account. Now, imagine with a property that's worth 1.8 million, how much stress would you be in?
With the situation that we just spoke about, that red flag level, what would you say is the major risk when it comes to if a cash buyer doesn't want to involve a conveyancer in the whole transaction?
No, not involving a conveyancer in the whole transaction.
Yeah.
The thing is, you are exposing yourself as the cash buyer. Now, what do I mean by exposing yourself? If I'm not bringing in an attorney, I do not have someone that has my best interest at heart, right? Now, the attorney is coming in as a third party, as you said. Now, they are in between myself and the person that's selling the property. Now, the attorney is going to make sure that both parties are happy with the whole transaction. Now, if I'm saying that I'm removing that attorney, this means that Neo could actually chow me. Or I could chow Neo. Now it's a dog-eat-dog world.
Yeah.
And you do not want that. You want somebody that's actually neutral, that would say that, no, you know what, this deal is it's going according to how it should actually be going.
Yeah.
Or this deal is not going according to what should be going. And if there is any termination, we could actually still do that.
At the top of my head, I'm trying to think about the worst
The worst case is that you get scammed, bro. Someone says that send this money into my account, and then you never receive the title deeds. I mean, we have a lot of people saying that, right?
That's the one that I was
That's the
looking
worst
for.
case.
Yeah.
We've had a lot of people coming through to us saying that, guys, you know what? I'm in a situation. I gave this person the money. This person took the money. I'm living in the property, but 5 years down the line, someone came back and says that it's their property. Now, I remember buying this property. However, it basically means that the money didn't really get to the owner.
And I mean, that's the thing again, looking at eviction from that way, because someone would be like, you pay and they don't even want to move out. That's another case, because at least if you are in, yes, it's still a situation and a half.
Yeah.
But then if someone doesn't want to move out, it's another
problem.
Yeah.
It's another problem.
So ultimately, with what we just spoke about, it emphasized the importance of the conveyancer as the third party, because yes, you are a cash buyer, yes, you have a lot of money in your account, but at the end of the day, you do want to do things the right way, man.
Yeah, do things right. So the other one, right, the other red flag that I had was in terms of location, right? We're always saying location.
Yeah.
Now, guys, please do not hate on us, because this is just things that we got from a reliable source, right, which is TPN.
Okay.
So they say KZN has the worst occupancy rate.
What does that mean if you're to simplify it?
It means that there are a lot of properties that are vacant in KZN that were bought for rental reasons. Right? From the first quarter, it was registered that 10.13% of properties are vacant in KZN. Second quarter, this actually increased to 12.06%. Now, let me give you perspective, right? Because now in your mind, it's just like, no, these are just numbers, or people are not really doing well, so the vacancies are allowed to go high.
Yeah.
The best performing right now is Western Cape.
Okay.
Western Cape is sitting on 3.62% vacancy. Now, it could be because of different reasons, right? But now you're looking at the vacancy rate in Western Cape, which is 3.62%, and you're looking at the one in KZN, which is 12.06%. For me, as an investor, if I'm looking at this, I'm saying that, do I really want to invest in this? However, let's take it a bit further. It doesn't necessarily mean that if you're investing in the Western Cape, you might be better than the guy that's investing in KZN, right? Because now remember, the 3.62% speaks for everybody, right? Which ultimately means that you can be part of that 3.6%. Whereas the person that invested in KZN is part of the 80%. the 80% that has people that are occupant. I think at the end of the day, or the thing that we are actually driving home here is that yes, we do have these percentages. However, you need to do your proper due diligence in terms of where or which positions or which locations are actually better for you to be investing in. Now, if you're saying that you're going to be investing in the Western Cape, understand that which market would actually best suit you. Because right now they said that the best performing markets would be your Airbnbs, and you're also looking at your student accommodations. That's where a lot of investors are actually driving at. However, this doesn't necessarily mean that this is something that you should be doing. Maybe you should be flipping properties, or maybe you should be renting out properties to young adults, right? Understand the game before you actually go inside it.
Speaking about understanding the game, let's look at it this way. Yes, you do have a tenant. You're in an area that's recorded that it has a low vacancy rate, but you're not seeing the fruits of your investment. So ultimately, we are saying that a business model is key. So even if I am to find myself in a place whereby there's a high vacancy rate, but I know that I'm in KZN, but I'm killing it. So when I'm looking at my affordability according to my business model, it's affording me to buy the next one. So ultimately, we need to really understand, and the only way you'd understand is you practicing every day and you having a property coach. So what we also do is that we have a mentorship program, and if you want to book a Zoom meeting with us, just hit the description, and it's gonna be epic because it's all about numbers. As you've seen right now, what we're discussing, that it's a numbers game. I shouldn't rush to be in a good location only to find out that I'm not getting the fruits of that location.
You're in a bad investment.
I'm in a good location, but bad investment.
Yeah.
Okay. The last one from my side, man, is that we shouldn't rush to be in a deal, especially as landlords. You know, there's nothing like just landing those keys and then all of a sudden I just want to get a tenant as soon as possible. So what I'm saying is that I'm not doing a credit check, and I'm not even asking for the right deposit, or I'm not even having the right lease agreement because I just inherited someone, or I just want to place someone in, because we need to understand something again, right? Is that we're talking about vacancy. Now, when it comes to TPN and other reports, they will assist you in terms of understanding your client, because now your client is the tenant, and ultimately you getting a tenant, you want to make sure that you vet this tenant, because they will be having a direct impact towards your business model. So last thing you want to do is taking someone in and only learning about them as time goes. This is not a relationship whereby
no, we'll learn with time, man. We'll get to understand each other.
This is business. We don't mix business with pleasure. So before you take a tenant, even though I know sometimes it might take 2 to 3 months, especially when it gets frustrating, you need to...
And it really does get frustrating.
It does, bro, because you get on a month-to-month basis and you're like, but that one where that Dodge application,
maybe I should just take him.
Let me just take them. Trust me, every time we've seen that situation, after a couple of months, it was evident that is why they had a bad credit score. Yeah.
Now, can I just end it off with on a good note, right?
Okay.
So, this is for the guys that are looking at purchasing properties right now and trying to rent them out. The credit bureau is saying that people are more willing to pay rent, or most South Africans are spending between 7,000 and 12,000 per month on rent. So what does this mean for you as a property investor? What does this mean for you as a property investor? This basically means that if you're going to be thinking about renting out a property, already you have your target market in terms of where should we actually be doing. Now, they further went on to compare it to the vacancy rates, right? And now this income bracket was the lowest vacancy, had the lowest vacancy rate.
Okay.
So if I'm saying that I'm going to be charging 7,000 to 12,000, I know that my positioning is in a better position in terms of me getting a tenant in that property, and me being able to retain the tenant in the property.
It's quite strategic, because again, it helps us in terms of positioning, because now you know that yes, even if you can afford something of 23,000 to 25,000, again you get to understand the risk element towards it, that the likelihood of me getting a tenant from 7,000 to 12,000. But here's the thing, guys, tenants are very, very, very tricky. And you know what's the thing about tenants, right? Like, even in a market whereby it's 7, let's just say 7.5. I want to look at it at the lowest, 7.5. Only to find out that other apartments in that area are renting out for 7,000. Trust me, these tenants
They'll
know.
flock to the 7,000.
They know.
Yeah.
Tenants know, man. Tenants do research.
We all do research, man. Even if you're buying track pens, bro, you'll actually go and check that what's on the market right now. A lot of people are buying iPhones. We are checking on the market that what do we have on the market. Now, if I'm seeing something that was sold for 7,000 and now I'm seeing someone else selling the same thing for 6,500, definitely sure I'm going to go to the guy who was 6,500.
No, man, it's just that I was bothered because here's the situation, right? Especially we had one of the properties, there was a tenant since before COVID, right? So what happened in that area is that after COVID, rental went down a bit by $500. Now we've been having that same tenant. Now it was mind-boggling that, but I'm used to collecting 7.5.
Yeah.
And now that it's after COVID, I've listed my property for 7.5. Nobody wants to rent there.
Yeah.
And then people that are coming through, they'll be like, man, we want to rent it for 7,000. Again, that's the power of the market.
Ish.
As landlords,
And you can't fight the market, guy.
you cannot fight the market.
You can't fight the market, man.
You learn the hard way if you want to fight the market.
Yeah.
You fight the market. You learn the hard way. It will stay. It will stay on the market. So here's the thing, is that it in my head, it was really hard to adjust moving from 7.5 to 7,000. Because in my head, property investing, especially when it comes to rental, it should be appreciating. So if I've had a tenant since COVID, it was that thing, it was a no-brainer whereby, okay, now I'm moving to 8,000. But again, emphasis on the power is in the market.
We're going to be hosting a property investing picnic.
It's going to be fun, man. It's going to be epic.
I'm really excited about it.
There's games that we'll be playing. There's what else?
Networking.
Networking, of
light
course.
working out.
And then also light workout, man. So the whole team will be there, from our accountants to our lawyers. Everybody will be there. So just make sure that you come through with your sunscreen and your sun hat, and then we network, man. It's all about us coming together and pushing hard. Invest like a pro.
Cheers.
Red flag.
It's this red flag, no?